Hey everybody, welcome back to my channel. If you're new here, my name is Jess and I am going to be dropping absolutely everything I've ever learned in the past 5.5 years about trading. So make sure you guys like this video, subscribe so you're alerted when new videos are dropped, and if you guys have any questions, drop it down in the comments. If you need specific videos made, drop it in the comments and I will be happy to start making any of the videos that you don't see on my channel. So today's video is going to be going over a simple futures trading plan. This is going to be based on a 50K prop firm account with a $2,000 daily drawdown. Okay, so we know the account parameters. The only thing I did not put in here was that we need a $3,000 profit target, and most prop firms do have a consistency. If you're unsure what a consistency rule is, it's typically in the evaluation stage and it is typically 40 to 50%. What does that look like? So when you're trading and you have a $3,000 profit target, let's just go with the 50%. That means in a single trading day, you may not make more than 50% of the total profit target needed to be funded. So you cannot make more than $1,500 in a day. So we know that not make more than $1,500. So when we're looking at our risk management, we can say we'll probably be on the lighter side of risking $500 because we're going to shoot for 3%, right? 3xing. So 5, 10, 15. I want to make $1,500. So risk 500 to make 15. The goal of having these prop firm accounts is to make consistent growth and to protect our capital. So as far as our trading rules go, this is going to look different for everybody. If you guys need help with a trading plan, let me know in the comments, but only going to trade 2, 3, maybe 4 high quality setups. And like I said, this may look different for everybody. You may take one trade a day and be happy with that. You may take 2, you may take 4. It depends also on price action, what the market is doing that day. There's news, right? So coming up with a set of trading rules for yourself is going to help you in the long run. And then risk per trade, right? How much are you willing to risk? We know that we have a $2,000 drawdown. Is $500 a good amount to risk? I think so. How many times can you lose with risking $500, right? Those are good things to look at. Break it down for yourself. If you need to get your calculator out and start looking at this, breaking it down, if you want to risk less than that, absolutely, by all means, because this is your trading journey. This is your account, your hard-earned money going into buying these prop firm challenges, right? So start to really put the numbers together. If you are not a math person, you better become one real quick if you want to be a profitable trader. So your stop losses. I get a lot of questions about this with stop losses. They need to not only be placed, but they need to be understood about why and where you are placing your stop loss. Yes, you want to max risk $500, but is that appropriate to where market structure is currently or your price action is currently? Does it make sense? And then also your position sizing, right? Does it make sense to trade one full size of NQ with what market structure looks like? How are you going to mitigate that? So finding that area and that sweet spot to where you can risk the appropriate amount and have the appropriate contract sizing is something you definitely have to sit down and figure out. For contract sizing, if we're talking about NASDAQ, a full size contract of NQ moves at $20 per point. So anytime it moves in your direction 1 point, you are gaining $20. If it moves against you, you are losing $20. If you were to trade the micro version, which is MNQ, you're gaining or losing $2. So $2 per point that it moves, dollars you lose per point that it moves. And then adding to losing positions. I see this a lot. People will add to their losers. Not a good idea. You want to potentially add to your winning positions, but you don't ever want to add to a losing position. If it is not going in your direction, the best thing that you can do is close out your position and walk away, and then look for that high quality setup again. Don't just re-enter the trade because, oh, now it's going in my direction. I'm just going to re-enter. That cause more harm than good. You want to wait for those quality setups. So, strategy guidelines. Obviously, everybody strategy is going to be looking very, very different. If we stop and we look at the market as a whole, right? Every single morning, everybody is trading the exact same market. But there's so many different people that trade it that see it very different. So if you are looking for a mentor, looking at signals, looking, at certain strategies that people do that you want to replicate or use pieces of their strategy, make sure that it clicks with you and makes sense to you. Coming up with a strategy is, I would say, like 20%, maybe 10% of what you need to be able to trade profitably. The other 80 to 90% is going to be your psychology, and we'll get into that later. So, using a strategy, you understand. You need to find, if you're brand new and you're looking for, a strategy, you just need to start looking at things that make sense to you. Going and looking at charts, testing other people's strategies, implementing things that they might be doing, and then putting your own spin on it and making sure that it makes sense to you as a trader. And then as far as trading goes, what hours are you going to trade? Why are you potentially only going to trade the 9:30 a.m. session? That is New York open. For me, I'm Pacific Standard Time, so I'm up at 6:30 trading open, the market open. This is the most volume in the market. This is where you're going to catch clean moves. Is it always clean? No, absolutely not. Markets can be very volatile and chop you up. You have to be able to figure out when the market is choppy and when to know walk away. And maybe it's a no trade day. And then avoiding like over trading. This is a big one. Um, Understanding again when to walk away and stop, not be greedy. And we'll go into the psychology of that as well. And then low volume periods. So after typically a big move, maybe after a news event, um, sometimes Asian session can have low volume, sometimes London session, pre-market can have low volume. So we're looking for those high volumes, get the best move, have the best risk to reward. So risk management. So this is a big one because the loss limit should not be in here. Don't really care about the weekly loss limit too much, but you can set all these parameters for yourself. We know that if we were to blow our account, this is wrong. Don't even read this. I don't know why this says this. We know that if we were to lose our $2,000 because that is our drawdown, then we would blow our account. So this needed to be 1,000. I would say your daily loss limits, you can set these inside of your Tradovate. You can set them in NinjaTrader. You can set them in um, Project X platforms, all in the settings. You can set your loss limits, especially new traders. Setting a loss limit for yourself so you don't just keep over trading is going to help you in the long run. Obviously, you can remove this at any point, and if you kind of have an understanding, you don't even have to set that. Max open positions. How many max position contracts are you going to do? What do you feel comfortable doing? Is it 2 contracts? Is it 4 contracts? Is it 5 MNQ? Are you splitting the difference? So if you were to trade one, like we discussed, that would be $20, one full size. If you trade 5 MNQ, however, that is $10. So you're splitting the risk of one full size NQ contract. And then your position sizing is definitely based on your stop loss. So position sizing doesn't make sense for current price action and your contract sizing to have a $500 stop loss. Does that make sense? And then your risk to reward, 1 to 2 minimum. Does that always happen? No. So being under the impression that if it starts to go into your direction, maybe at that 1 to 2 minimum, that's where you put your stop loss. And if it comes back on you, then at least you have your 1 to 2 minimum. I know this is a lot of information, but I promise it will start to all make sense the more you start to dive into the market and just encompass everything that comes with it. So, risk to reward is definitely important. Some days, just closing out at break even is something that happens, and being able to understand that. So, moving on to your disciplines and rules. As far as trading goes and journaling, this is very important because there'll be days when maybe you crash out and you don't remember what you just did and you just blew your entire account, right? So, making sure you're taking a second to either write it down, make a mental note of it, maybe put it in your notes. If you can make a mental note, great. If you cannot, put it in your notes, have your notes open on your phone. At the end of the day, if this is something you want to do, but you struggle to write things down, maybe make yourself a voice memo. Start making voice memos. I took entry at this point. I exited at this point. This is how I was feeling during the trade. I was super anxious. I was panicking a little bit. Maybe I need to size down, right? Or it was great. I'm really thrilled with how today went. Clean entry, clean exit. I felt confident. I felt like everything lined up, putting those things in perspective and then being able to remember them, reflect on them, go back to that day, kind of see what you did. And then maybe voice memos not for you. Maybe you just record yourself. Maybe you make like a self like YouTube short or a TikTok for yourself to go back and watch, right? However that looks, however you can get it done. I personally am not somebody who can just write down what I did. So I do voice, or I do videos, excuse me. And then setting rules for yourself. Remember, this is our trading plan. So we want all these bullet points out. How are you going to write like your trading, right? After red trades. Sorry, that was confusing. After your red trades, are you saying that if you traded 3 times in a row and they were all losers, are you done? Right? Maybe if you took 2 trades in a row that you lost, are you done? And then taking breaks after a big win or loss to reset your mindset. This one's very, very important. So if you are not taking a mental break after a big loss, you could come back into the markets the next day and make poor decisions because you're still in that heavy reflection phase of you just, potentially lost a ton, right? And might revenge trade. Same goes for big wins. When you have a big winning day, sometimes your view of the market can be very skewed. What do I mean by this? If, let's say, I had a 16K winning day, and the next day I went into the market and I said, I'm going to double it today. And my psychology and my mindset is not correct because I'm on that high of winning this big win and thinking I'm going to double it, right? Potentially, could I? Sure, but what primarily could be the outcome? Probably losing because I'm making poor decisions because my mindset is not good. So, reviewing also your weekly performance on Sunday, like going back and kind of walking yourself through your trades. If you're charting on TradingView, leaving up, your winners, maybe writing it on there because it will stay in there, and then or looking at your journal, right? That's how you're going to be able to reflect on what you did, what transpired, being able to reflect on how you felt, what was going on that day. Those are all good things. So, really reflecting on that. So, this is just an example trade, right? So, if you were to have your 50K, $500, and then you do 10 ticks, oh, with one contract. Okay, I see. So, $12.50 per tick. Remember that there are 4 ticks that live inside of a, so 4 ticks live inside of 1 point. So $50, 10 ticks, 1 contract, Take profit, 20 ticks. So confused. I should have just done this. I don't know why it did. I should have done points. I think I was supposed to do 10 points. Yeah, I was supposed to do 10 points. 20. It wasn't supposed to be. X that out. X that out. It's supposed to be points. So 10 points would equate to $500, right? That's what we're risking because that's our stop loss because there's $50 per point. So $500, we want 20 ticks, which is the 1 to 2, but primarily if we're trying to pass our funded accounts and we have that 50% consistency rule, we potentially want to be looking for the 1 to 3. So then we could, of course, make that $1,500 in one day. Is that something everybody should be shooting for? No, not at all. This is just an example, right? So 10 points, not ticks, is your $500. And then 20 points is what you're looking for to gain that $1,000. Okay, so the conclusion to this is that when we're trading, and like I said, everybody's going to look a little bit different. We are going to want to protect your account. What does that look like for you? Does that look like taking one A plus setup and then any subsequent trades moving stops to break even immediately? Or does it just like look like what taking one trade a day? And then protecting that capital, walking away and locking yourself out of your account. And then trade only the best setups, waiting for that setup, being patient, not FOMOing into trades, and then having a strict set of rules stay within your drawdown. Understanding your drawdown is going to be your saving grace in this, because if you do not understand the drawdown that you have available, then you can ultimately blow that account. And then the consistency, right? If you're showing up to the market every day, you have a set of rules, you have your plan, you know what you're trying to get out of the market every day. If it happens, great, thrilled, proud of yourself, be able to walk away, not be greedy. And then if you take a small loss, know that that's your loss. You're done for the day. If it's, maybe like we said, that $1,000 lockout, do that too. It's whatever you want to do that you guys see fit for yourself. And remember that this is all educational. This is for informational purposes only. I am not a financial advisor and I cannot give you guys financial advice. And trading comes with heavy risk in that you understand that take this risk. This is on your own discretion. So just a little disclaimer there, but that is going to be it for me. If you guys have questions, as always, drop it down in the comments. Or if you need answers or need a video made on something, I am happy to help that as well. So like, subscribe, and drop the comments. I'll see you guys in the next video.